You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. So be sure to check out our live stream via the Mixlr app or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by QuickStrike, options pricing and analysis software. Learn more about QuickStrike at bantix.com. This Week in Futures Options is also brought to you by CME Group, the world's leading and most diverse futures and options exchange. Visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. For more information, please visit ftserussell.com. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody, that music means it is time once again for TWIFO, This Week in Futures Options, a program where the name pretty much says it all. We break down the week that was and indeed still is on the other side of the fence, the futures options side of the fence. Maybe we'll talk some energy, maybe we'll talk some ag, some metals, get some equities in there too. It all floats in there, as well as, of course, your questions, your comments, some of the products you guys want us to feature there on the show as well. My buddy, Mr. Sean, traveling hither and yon. I think he's still coming back from the CME conference down there in Florida, the old GFLC conference, the Global Financial Leadership Conference. And so it seems like he's off in the wind. We won't have him joining us today, but we're going to keep on rolling into the new products as well. Before we get to the new products, we'll dial into deal with some of our old products, the ones we like to talk about. Let's see what's moving. Let's see what's lighting it up here this week. Let's do our usual movers and shakers. As always, you can find this cmegroup.com/TWIFO, TWIFO. You go over there, you can find our This Week in Futures Options reports, and that'll break it all down for you. You can see exactly what we're looking at right now. And let's see, let's go, since it's just me, let's go to the upside first. We'll be positive, why not? Number 5, we've got heating oil. I think you're going to see a bit of a theme here to our movers and shakers this week, listeners. 2.5% up for heating oil. Number 4, soybean meal, 3.4% to the upside. And then we got number 3, Brent, up 3.8%. Number 2, WTI, up 5.8%. And number 1, with a bullet, is nat gas, up nearly 7%. It's up 6.75%. And to the downside, we've got, let's see, the bottom of the bottom. So I guess the place you want to be. You don't want to be number one at the bottom because that's the biggest loser. It is KC Wheat with off nearly 2%, 1.96%. Followed number 4 by lumber, off 3.25%. Number 3, wheat. Also, actually, wheat and lumber is like they're about tied, both off about 3.28%. So a bit of a tie there for the number 3/4 spot. Number 2, oats, off nearly 5%, 4.95%. And number 1 with a bullet to the downside, old friend, Class 3 milk, off about 5% to the downside. So let's kick things off. Let's dive into some of the fun stuff. We're supposed to have our buddy Mr. Eric Norland on the show today. Last minute, he had to scramble along to meet some other things. So I know a lot of guys have been asking about his paper. I was hoping to discuss it today, skew and all that fun stuff. But he's unable to join us today, but we'll get him on again before the end of the year, listeners, because I know you guys like breaking down all of that good stuff. Instead, as you might know, listeners, we are in a wee bit of some crude climate. There's a few things going on in the land of crude, listeners, and I'm just being hearing from my producer. Eric will be on next week, so there we go. All of you asking about that. We'll get him on next week to talk about all of that good stuff. But let's get into all things crude. Of course, OPEC meeting kind of going on as we speak. It seemed like the narrative at first was, oh, they're pushing back on this. No, we're not asking everyone to make deeper cuts. Now, of course, the news coming out that they indeed did, and pretty much the allies and OPEC all agreeing to do just that. Of course, they're meeting to discuss their supply policy over there in Vienna right now. So they're meeting, of course, with the OPEC members, Russia, as well as some others out there, Turkey, all the extended family that meets with OPEC to decide these types of things. Of course, the big elephant in the room is the pending IPO of Saudi Aramco. We talked about it last week on the show, how some people are speculating maybe there's a little bit of theater going on in the crude space right now with the Saudis trying to keep a little bit of life to the crude price so it doesn't look bad and doesn't hurt their IPO going forward. Also had an interesting paper by Blue on the show last week. Maybe I'll have to ask Eric about this as well next week, about how he thinks the upcoming Saudi IPO may be the beginning of the end of the Saudis really keeping their finger on the puppet strings of the crude market. They may shift instead to managing their stake in the IPO and the company, I should say, instead of managing supply so diligently, buying and selling shares. It's an interesting, somewhat controversial take. I think our guest there, Russell, disagreed with it at the time as well. Interesting stuff. I encourage you guys to check that one out over there. But let's get into what is actually trading out here. Before we do that, actually, really quickly, I should bring out a tool that you guys probably don't talk about a lot, but you guys like to probably use, the OPEC Watch, which is, we talk about Fed Watch here a lot on the program, but indeed, OPEC Watch. In fact, I'm going to cheat and bump up a listener question from Miller. I'm going to joke and think he's trying to spell out mall rats in a funky way. So I'm going to call them mall rats. Mall rats wants to know, can you discuss OPEC Watch on the show? Well, let's do just that. You guys can find this for yourself wherever you find a Fed Watch. So seemeofcourse.com or just typing in Fed Watch. You can also do the same thing, OPEC Watch. Not a lot of other things popping up in that search, trust me. So you'll find this one. And it does exactly the same thing we're talking about here with the Fed Watch. With the OPEC Watch tool, it effectively tries to use the markets to predict the outcome of the upcoming OPEC meetings here. So, yeah, it's interesting to watch here. And coming into showtime, we're actually indeed coming into the OPEC meeting itself. We saw markets were actually surprisingly in favor of maintaining the current output cuts. So right where we are right now, about 72.5% is what the market was pricing in probability that we're going to stay the course. Only not even 25%, about 24.25% saying they're going to increase the output cuts, and only about 3 1/3 out there saying they were going to increase output, which be very unlikely in indeed of itself. And so, of course, we did see the Saudis and the rest agreeing to extend the current cuts here and also deepening the existing cuts. So we have 1.2 million barrels per day. They want to extend it by another 500,000 barrels per day. So that means 1.7 million barrels per day here going forward. Amounts to not quite 2%, 1.7% of global supply. They're expecting this to last through at least Q1 of 2020. Now, that's a little bit shorter than some people were speculating, so maybe there's some wiggle room there on the time frame. Maybe they got them to agree to deeper cuts, but for a shorter time frame than they wanted. Either way, interesting. Let's go out here and see what the market was actually trading up. Like we said, WTI was moving this week up nearly 6%. Coming right now into showtime, we're looking here. Remember, you guys, listeners, can play along for yourself. CMEGroup.com/TWIFO. Click on the drop down for energy. Then head on over to WTI. That's how you can begin this journey over here. For some reason, my screen wants to stay on Class 3 milk. We were looking at that before the show, so we're going to pull it on over here into WTI there in a second. All right, here we go. As you mentioned here, of course, it was up nearly 6%. Of course, listeners, this is the moment. Here we go. Here's our WTI, deciding to finally play ball with me. Like I said before, listeners, you guys, it's up to you. Your mileage may vary. I like to hit select all to see the full range, the full breadth, the full depth of what is trading in a particular product. But for you guys, that may be a little bit overwhelming, so they do a nice little synopsis view here for you. That's kind of the summarizing the active months and contracts and everything else here when you pull up any product here. So that will perhaps be enough for most of you out there. But if you're like me, you're a completionist, you want to see the full breadth, then you got to hit the old select all. If you did that, you'd see WTI actually up over 6% now, so increasing its upside in the wake of these cuts. That puts it up about 3.5 handles right now to about 58.5 coming into the show here. Vol, not surprisingly, coming off hard. Of course, there was event risk, and it's like any other event, an earnings in an equity, a crop report in an ag, whatever the case may be. Once the event happens, 9 times out of 10, the air is going to come out of that balloon. That's pretty much what we saw here we are seeing, I should say, right now here in WTI with vol coming off. Multiple handles, 5 handles in that Jan contract, 2.5 handles out there in March, actually 3.25 handles in March. So a lot of vol to be squeezed out of this balloon. Let's talk about this before with Mr. Rhodes here on the show about how it's fascinating just to watch oil as a volatility product. People don't think of it that way, but it is much more volatile than you think. The volatility of crude volatility also more volatile than you think. So products like OIV and others, which actually are the VIX of WTI, are fascinating to watch on a day like today. If we pull that up, we'll see that, of course, OIV coming in right about 4%. I hate to say percent. I know the vol fans hate it, but c'est la vie, that's the nomenclature everyone likes to use. Right around 30 handle right now. You can type that for yourself on your platform of choice, listeners. OIV is the ticker that's going to give you your WTI VIX. Not a tradable product, but indeed an index you guys can watch out here. Let's go back to the tradable products, see what's going on. Most of the action, 53%, was in this Jan contract, with the lion's share of the action coming on the double puts, 55 puts, 21,000 of those bad boys, almost 22,000 going up this week. That is by far the biggest print going up out here. Interesting, because slightly out of the money puts, not that surprising though. People hedging against maybe some aberrant move to the downside, maybe OPEC surprising people and squeezing a little bit of crude to the downside. Not exactly what played out, obviously, but still a lot of paper. And most of that opening, well, actually not most, let's say about close to 3,000 of that opening. We don't have today's volume. Today was a big day, 8,700, so that could cast a wrinkle into how that, I got to imagine a lot of today's paper is probably closing, so maybe that'll change those numbers a little bit. Number 2 are the 60 calls. So it was a double puts, 60 calls, a nice tight strangle / risk reversal, call it what you will, with about 19,400. The lion's share also today, 7,100 of those bad boys going up. Really quickly here, let's see what else is going on. About 54 puts also doing a lot of paper this week, about 18,000 of those. The lion's share actually yesterday, 7,500 of those bad boys. Let's look at the skew. Where the skew, a lot of people asking about how is the crude skew. What's going on with crude skew? The lack of any interest in the crude skew these days is been an interesting ongoing narrative out here. Let's see how it's shaping up. Obviously, the ball's coming in pretty hard, listeners, so take that into account. That's going to adjust your skew a little bit. Let's go out to Jan, where 53% of the paper was. That obviously has not that many days left to go, actually. This is within my within my 2-week window that I like to use, my 2-week barometer for judging skew, but we'll make an exception here because that's where the lion's share of the paper was this week. The puts are actually surprisingly unched. They were about 10.4% risk at the money last week. This week, 10%. So not much going on there. Calls were where the change was, as you might expect. 5.8% cheap to the at the money this week. Coming in, as you might imagine, all that ball coming out. 9.2% cheap. So coming in quite a bit there on the call side of the ledger. Let's go out really quickly to see if we can see it. Let's go to the contract. There's a few more days to go. Let's go out to Feb. That has a few more days, as you might imagine. A little bit more than 2 weeks. Let's see how the skew is performing out there. Feb did about 21% of the paper this week, and it was pretty much the same story. The puts almost unched, 10.7% rich last week, 10.1% rich this week, so the bias is still clearly to the downside. And the calls were 7.7% cheap at the money this week. They are 9.2% cheap to the at the money. So yeah, not a good week for those out there looking for a narrative to say, hey, upside calls are where I want to go, where the action is, where the skew is leading me. Not at least so much. Let's look really quickly, see if any aberrant paper lighting up our tape. Going a little bit farther out, not a ton, nothing really. 70 calls is about as funky as it gets. These are in March of next year, about 4,300 of those. Not a lot to write home about there. Interesting stuff out there. Let's go really quickly to Nat Gas, staying in the energy sector for a second. Nat Gas, you've listened in the show lately, has been kind of the mover and shaker du jour. Pick a week, it's lighting up the upside, lighting up the downside. This week, it is our top mover to the upside, up nearly 7%, about 6.75%, and it's pretty much maintaining that now coming into the show here. So big week here for Nat Gas yet as well. You know, people have been speculating for a while. A lot of this has been driven by these extremely dire predictions for extremely cold winter here this year. So far, you're getting a decent chunk of that, getting a lot of snow out there back east as well. So that's all helping to support this extreme upside valuation, a move here at least for Nat Gas. Let's see what was lighting it up out here this week. Nat Gas also playing in that Jan contract with about 57, almost 58% of the paper going up in that contract. That contract has about 21 days to go. And let's see here. Vol-wise, actually interesting. Vol up on that contract. If you go farther out, once you go past June or so mid-year of next year, the vol's pretty much coming in, but in that nearer portion of the curve. So the front few contracts there from June in, it's all catching a nice lift from a vol perspective with the Jan contract up about almost 2 points. And then you go out to Feb, it's up 5 points. So big move out there. So interesting stuff out here. Let's see what's going on volume-wise before we get to the skew as well. Like I said, right now, Nat Gas, that front Jan contract at about a 2.43. The two puts were where the action was again this week. This has kind of been a theme whenever we check in on Nat Gas vol. You might think it would be upside call, something else like that. No, it's usually these 2 puts and 2.25 puts are kind of where all the action is, and that's pretty close to what it is again this week. The 2 puts leading the dance yet again. 36,000 of those bad boys on the tape, 20,000 going up on Tuesday. That was a big day. Decent chunk of that closing, so maybe some downside folks deciding that 2-strike ain't coming back anytime soon, closing out those puts. Then we do have some calls. So the first time in a while we see some calls in the top 5 here on Nat Gas. 2.75 calls also in Jan, doing about 21,000 contracts. The lion's share on Tuesday, about 11,400, with about nearly 7,000 to the upside opening. So decent amount of opening upside calls. That's not surprising given the fact that we are moving up about 7% here this week. Let's see what the skew had up its sleeve here this week as well. We have, let's see here, with a good 21 days to go. So this is a healthy barometer here. We had the puts last week were 6% cheap to the at the money. This week they are 4.8% cheap. So puts getting a little bit of a bid, not quite bid, but getting a little bit of a lift compared to last week. The calls were 8.2% rich, so the action was clearly leaning towards the calls last week. This week, those calls have come in a little bit to 7.1%. That's not surprising. You're moving up the curve, so you're going to see some of that stuff come in as you move up the curve. You got some of the move that you expected. Let's look out here really quickly to see if we can see any other aberrant paper. It is primarily all puts all the time out here, listeners. 2 puts, 2.25 puts, 2.5 puts. Depending on the month you're looking at, that's effectively what we're seeing out here. So surprising amount of puts trading for a name that's been pretty much upside for quite a bit of its recent history. It has had some downside moves, of course, but of late, it's been pretty much mostly upside. You know, let's get to another category you guys ask for a lot. We don't get a chance to talk about on the show a lot, but they have been moving quite a bit. Let's go out to ags. In particular, like we said this week, what was moving this week? Number 4 to the upside, 3.5% was soybean meal. So let's start there. We haven't had a chance to talk the beans, let alone soybean meal, in quite some time. So again, listeners, get on over to the ag drop down, slide on over to grains and oil seeds, and then soybean meal. You'll find it's been a decent week out there for all things soybean meal options. About 40,000 of these bad boys on the tape this week. So pretty decent paper. It's not, euro dollars, but then again, it's not a couple of thousand contracts out there. It's actually a decent amount of paper out here. The lion's share of the action, almost half, 47%, going in this contract that is going out in about 22 days. This Jan contract here. Let's see what's going on out here. And let's see, we're at about a 301 half or so out here in the soybean meal. It was the 295 puts leading the dance out here in this front contract that has about 22 days to go. Doing about 3,600. Again, this total of about 40,000 contracts this week, so it's not blowing the doors off, but decent paper. 3,600 of these going up this week. The lion's share actually on Monday, 1,800 and 1,100 today. Let's see. Yeah, and let's look at skew out here in soybean meal skew. Don't get to that very often out here. By the way, is bit of a mixed bag. The front contract actually coming in a little bit, and then the rest of the contracts, and again, there isn't a huge selection out here. The rest of the contracts getting a bit of a lift, so bit of a schizophrenic play out here in terms of vol in soybean meal. Now, of course, soybeans and all related products, very much ground zero for all things trade war. We've seen this will they, won't they dance for the trade war extending. Now we're hearing rumblings out of Washington that, of course, maybe we won't have it settled before the end of the year, maybe not even by the next election. Trump saying he maybe would like to see it go past the election. So a lot of interesting rhetoric, some pushback from China recently as well, of course, over the Hong Kong bill we signed here in the U.S. So a lot of back and forth, a lot of it leaning towards they're not getting anything done anytime soon rather than a little bit of detente over there. So all of that, of course, being felt in the soybean and soybean meal market as well this week, hence the vol. Let's look at the skew out here. You got to go to that front contract. It was, let's see, the puts were cheap last week. They were nearly 8% cheap this week. They're still cheap, about 8.6% cheap, so not a lot of action there. Calls have come in a bit, though. They were about 12% rich. They had the money last week. This week, about 10%, so they've come in about 2 points here. So calls coming in. Not surprising, again, we got a little bit of a lift this week. Also have some of that, maybe taking some of that vol off of the table there from a skew perspective. And let's see, 295 puts were where the action was out here. At least you guys like your ags. Let's stay in ags really quickly because we had a lot of ags actually lighting up our movers and shakers this week to the downside. A lot of ags were leading the charge to the downside. In particular, we have wheat and oats. They were number 2 and number 3 to the downside with 4.9. Actually, oats at 4.92%. Wheat 3.25%. Also, lumber was there, 3.25%. And KC wheat was at 1.96%. If we're looking at wheat, we got to go to our old friend Chicago wheat, a.k.a. SRW wheat, a.k.a. the soft red winter wheat. For those of you not versed and fluent in all things ags out there. They had a decent week as well, about 80,000 contracts on the tape this week. The lion's share of that action came actually out here in the March contract with about 35, almost 36% of the paper going up out there. Worth noting the contract's off, like I said, quite a bit, about 3.33% right now. That puts it at about a 523 3/4 out there, so right a little bit shy of that 525 handle. And it was indeed 520 puts that were leading the dance out here. Not probably surprising. Actually, I take that back. It was 520 puts, but in a different month. It was pretty much 520 puts across the board. It was actually, let's see, I'm sorry, I said March here was where the action was. The overall action was 36%, but actually the number one trade this week was in the Jan 520 puts with about 3,300 of those. Then there were about 3,200 out in March. So 520 put strikes were where the action was, kind of across the board. Same deal out there in some other months as well. 520 puts, kind of where the action was. Let's go to where the lion's share was out here in March and see how the vol came in. The vol actually popping up a little bit, about a point or so. So maybe a little bit of a surprise to this move here this week. And pretty much everything trade war is a surprise. It gives and it takes. Kind of the quote-unquote gift, if you see it that way, that has been giving for the better part of 16 months out here right now. So interesting stuff. Let's look at the skew. Skew was about 2.3% cheap to the at-the-money last week. This week it's about 3% cheap to at-the-money. And coming up here on the call side, the calls are about 4% rich. Same deal this week, about 4%. So not a lot of movement skew-wise. A little bit of vol coming in on the downside for the puts. Don't see any real aberrant strikes lighting it up out here as well. And since you guys always write in joking about it, we can hit on it for you really quickly because it was moving again this week. Our old friend, you've asked about it before, Class 3 milk. It was the leader of our bottom five, losing about 5% here this week. Interesting stuff out here in our old friend, Class 3 milk. Doesn't do a ton of paper. It does about 7,600 contracts. It's actually not bad compared to when we looked at it last time. Of that, about 40% coming in the D's contract, which still has about 25 days to go. So interesting contract specs out here in Class 3 milk. And of that, like I said, we're at about a 19.4. It looks like the 19 half calls where the action was this week in D's, doing about 700 contracts. So roughly 10% of the volume going up in those 19 halves. So a little bit of upside. So even though it's selling off, got some upside lighting it up out there in all things Class 3 milk. So don't say all you've written in about dairy, asking about dairy. Want to see a little bit more interest in that. Don't say we never gave you any love here on the show. If you like more dairy, of course, our friends over there on the Volatility Views program, the T3 folks, actually came up with a milkshake index monitoring the volatility of the dairy space. Now, it's going to, I think, mostly focus, because this is the products they have access to, they're mostly going to focus on the Australia, the kind of that ANZAC region, the Australia, New Zealand region. But there's a lot of dairy out there. So if you're interested in that, you want to maybe have a interesting look at all things dairy volatility, it's literally the only product I know of its type. So check out the milkshake index if you are so inclined. Like I mentioned, our buddy Sean, he's traveling. Actually, I did hear just recently in the middle of the show, he's actually in Singapore right now. So he does like to hit far-flung locales, and he is out there right now, hence why he can't join us here on the show. We're going to hit a little Russell, though, see what's going on in that neck of the woods as well. Pretty quiet week out here in small caps, even though small caps were moving a bit. Not a ton, off about 0.5% out here this week. It puts it down about 9 handles. But importantly, north of that 1,600 level. We've been talking about it for a while here on the show. Can it break 1,600? There's been a lot of technical analysis. People writing in saying it seems to have a lot of hard time really breaking through that 1,600 level. Serious resistance at that level to the upside. Well, it broke through it recently because we're north of that right now. We're at about 1,615 or so out there. Even given the week's sell-off of about 9 handles, we're still north of that 1,600 level. So I guess that resistance, at least for the time being, has been overcome. And we talked before about it's kind of all puts all the time out here. That mostly seems to be the case again this week. The big action, like I said, we're at about a 16-15 right now. On the Russell, it's the D's 1480 puts leading the chart. So not quite as long term as we see. It's a little bit closer to home. There's about 15 days to go in those puts. So usually we see 3-6 months out, if not more, on the puts. But playing on those 1480 puts, but they still are pretty far out of the money. That seems to be a recurring theme in Russell. For some reason, we have yet to interpret and intuit why the heck that is. People, for whatever reason, who are trading this product that really like to aggregate their liquidity on pretty far out of the money puts, farther out than we see in the S&P or other products like that. I've tried to analyze why that is. I don't really have an answer for you yet, but it's interesting. And worth noting, coming into Showtime, we saw volatility kind of up across the board from our last show. The VIX itself was at about not quite a 14.75. That puts it up about a point from where it was on our show last week. Our old friend, the volatility of volatility, aka VVIX, was at about 99. Puts it up about 3.25 handles from the show last week. And of course, RVX, aka the VIX of the Russell 2000, at about an 18.5. That's a bit of a movement. We saw it kind of stagnate for a while there and hang around that 17 and change level, actually 16 and change level for a while there. Now it's up nearly 2 points, about 1.75 points from last show. So that means that spread, that VIX RVX spread, which is of course large cap versus small cap volatility, has widened out a bit. It's not quite 4 handles, it's about 3.75 points, but that's still, it's been locked at that 3 handle for couple of weeks now. So good to see some interesting movement out there. And speaking of movement, let's see what movement we got on the front with you guys, because you guys always have great questions for us. Maybe you have some products you want us to talk about as well as we get on into your futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/The Options Insider, stocktwits.com/Options Insider, or via questions at theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live every Friday at 3 p.m. Central via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right, let's get to it. Got some time for you guys on the show today, which is always kind of fun. Everyone's traveling hither and yon or scrambling or running. I know we have some people coming on and going to join us from the oil markets today. Oil markets are lighting it up right now, so no surprise they're busy trading as well. So a lot of fun stuff going on in the world of all things futures options. Let's see what's going on with you guys. Let's start with a question here from Jackson. Jackson Knight. He's asking, why is it so hard to trade futures options with most major brokers in 2019? Seems like it's still 2009 for a lot of these firms who only expect you to trade Apple and SPY. Well, there's a reason they expect you to trade that, right? It's because it's what you guys mostly trade. When we talk and look at the most actives on our shows like the Option Block and others, what's dominating the tape for equity options? It's Apple. Far and away. It was again today. It's number one out of the top 10, I'd say 70-odd% of the time out there. So there's a reason why they lean towards Apple. SPY, same thing. People love their SPY. It trades quite a bit. VIX, other products you guys like to trade. So you can't blame them for favoring the products that you guys clearly favor. But that said, if you listen to, like I said, shows like Option Block, you will see there are some interesting nuggets, interesting pools of liquidity, even on major brokers like a Fidelity, where they have a lot of small biotechs lighting it up and things. So it's not all Apple and SPY. It's just a lot of Apple and SPY. But I see your question about futures options. I think, if you had written this question to us a few years ago, I probably would have agreed with you a little more. I think that situation is mostly changing. Obviously, it depends broker by broker. Some have done a better job than others of really going out of their way to push and to develop, to bring their futures options offering on par with what you expect when you're trading your SPY and your Apple. If you go to any retail options broker and you open up an account and you want to trade Apple and SPY, you're right, you can do it. They got all the great bells and whistles. If you want to trade futures options, a lot of times it's like, oh, we don't offer that, or it's maybe some other system that they bought and acquired and tried to slap into their current system, and it's not quite as feature-rich. So some big players out there like TD and others have done a good job of really trying to accentuate over the course of the past year and trying to bring their futures options offering on par with what they have going on out there. So interesting stuff from that perspective out there. Let's see what else we have cooking here in terms of all things question. But yeah, in general, I would say, sorry, we got people beaming into the show yet again. But talking about all things futures options, I think you actually are in some good times here, Mr. Jackson. I think things are getting better. I'm not going to make a list of the brokers that I think are better. I did just name one. Of course, they're in the middle of some M&A right now with a broker that, shall we say, is not as futures and futures options friendly. So I don't know how all that's going to play out. Whenever one broker acquires another, platforms tend to get up in the air and things take a while to sort out. So play with caution there. But in general, it does seem like these are better times for that. And I guess like we were joined now, better late than never. Things lighten it up out there in the crude oil space by Mr. Adam Webb, the founder over there at Macro Hedged. Adam, are you there, sir? Can you hear me?
Yes. Can you hear me okay?
Yes. Welcome to the program. I hear things are a little busy in your neck of the woods these days.
Yeah. It's been a bit of it's been weird, actually. It's been a bit of a choppy session. I think a lot of people have been cut up, but no real direction to it. Looks like the direction happened before the meeting, as always. Then we'll have the outputs of all the meetings, and then kind of next week was when the flow really starts. But all good. How are you doing?
Well, we're good. We kind of just ran through a lot of our complexes. We're just getting to some of our listener questions. But since you have a chance to join us here, we'll table that for a second because you're out there right now. Like I said, in the middle of the OPEC settle, we had the big meeting today, the big announcement. People I mentioned at the top of the show, the OPEC watch was predicting kind of mostly a stay the course. What was your take on what we saw out there? What were you seeing out there from a flow, from a volume capacity, and what was lighting up your tape out there today, sir?
Well, I think there's a lot of people out there that are still looking for some dreamy upside, but the vol's really interesting. Vols come off because of the kind of lack of anything. The dreams have gone, so vols come off quite considerably today. There's still a lot of people interested in buying upside, but they're selling super top, so they're kind of buying 60s, selling 75s. And overselling 75s, they're buying 60s, overselling 65s in shorter terms. That's a play. There's been a guy recently in the Brent. He's been doing it on CME and ICE. He's been doing a laid up 55 puts, and he's done them in literally thousands and thousands. I think he's up to like 16,000. And he's also the same guy who's been coming in doing 50, 70 fences or risk reversals. We've seen a lot of that action over the last few days. But I would say because people are kind of a bit nervy, could be a slow grind higher instead of a leap. That people are kind of 1/2 ratios, 1/3 ratios. They're really selling that top side because they don't want to be too theta burned. Because crude IV, if we do tick higher, is probably 7 or 8% overpriced at the moment. And downside, skew's really not kind of there on the demand space. And I don't know if anybody saw, but there's been a massive indent today in K 2020. Crude, it's come off by 4.5% compared to the rest of the complex.
Yeah, a lot to unpack there. Something we were talking about at the top of the show, but looking at what was trading out there and looking at the skew. And you're right, that's kind of been, I think we've discussed this before when you were on the show, and a lot of our listeners continue to write in asking us about this. They keep looking for, keep expecting this moment when the worm turns, when the inflection point happens, people start buying upside calls to show that, hey, the upside is ahead of us, and certainly we've had a near-term upside move in crude. But in general, you're right. What we're seeing on the skew numbers isn't really supporting that. So it sounds like people, even if they are buying upside, they're overweighting with farther out of the money calls, and that's kind of keeping our skew pretty much tamped down. Is that what you're seeing?
Yeah. You kind of need a shock. You need a price shock to get the skew to move, and we're not really seeing that. There's the sell-off on Thursday, Friday. I was not. I think it's Friday last week. The sell-off Friday last week that's been completely retraced and some kind of shocked to 6%, and we've kind of sold off that 6%. And you look at skew to skew, 20s across, we're completely exactly as we were. There's no bend in it at all. So it's kind of there's that complacency that comes into to crude oil when you get these kind of prolonged periods of range, and we're only really going to break out of that when we start to see any kind of further depth in the backwardation on the futures structure, or we start to see coming back a bit more towards contango. That's when we start to see things break out of ranges.
And you mentioned the 50-70 risk reversal, as you call it, a fence. I like that. We don't really hear it called a fence too often here in the States. I like that. It has a bit of a European ring to it. But 50-70 risk reversal, so they were buying 50 puts, selling 70 calls. Is that what they were doing?
Yeah.
That sounds about right for what we're seeing out there skew-wise, which is another sign, listeners. They're not loading up on bullish risk reversals. They're not selling that 50 put in order to load up on the 70 calls. So all those out there who've been asking, looking for, hey, what are you seeing from a crude skew perspective? Is there some sign that the worm has turned? Again, we've seen a bit of a rally this week, but a lot of that's coming off the heels of these cuts. Speaking of the cuts, there's been a lot of debate. There's been research coming out of CME and others debate other places that, this Saudi forthcoming IPO is really going to change the game in terms of maybe Saudi involvement in OPEC and indeed in the crude space, and maybe not going to be as micromanaging from a supply perspective. They'll shift to managing perhaps their shares in Saudi Aramco instead. But in the near term, leading up to the IPO, they're very much micromanaging to try to gin up as much support for crude prices as they could see. People have been terming it a bit of Saudi theater out there in the crude space. Is that kind of the whiff you're getting as well from the crude markets right now, that this is a lot of support in the near term leading into this big IPO?
Yeah, you've got a couple of things going on. I think into this big IPO, the Saudis are going to be a lot more kind of day-to-day micromanaging it. But the real interesting thing that's kind of been of note for me is Mr. Trump's silence in the whole crude picture, and that's because there was something I read that UBS covered a few months back. Basically, the US are now the net beneficiary of a higher oil price. They're basically net exporting of crude, and it actually now shows a small, only about 400 million a year, 400 million a month of GDP benefit. So a higher price of crude will actually inflate US GDP by a small amount. So we all know Donnie's addicted to the stock market and GDP growth. So his silence in that area could be representative of that new news, coupled with the fact that the Saudis are really taking a grip of what's going on a day-to-day basis, because they need the price where they need it over the next few months. I think they're quite bullish factors. That and the fact that we are seeing higher refinery runs, we're seeing draws in Cushing. We had the outage at Keystone. Was the big draws. Some of the guys that we speak to that are in the physicals markets, mainly around Pad 2 and Pad 3s, are basically they predicted November and December heavy December draws at Cushing, which is completely rare. We see builds into it's the seasonal trade has killed people, because we're seeing draws in Cushing, we're seeing draws coming across most pads, and we're going to continue to see that. Now, when driving season comes, does that exacerbate and we get the bigger problem? And that's when Trump gets involved, because it's got to the point where it affects his base. There's a whole heap of stuff going on, yet we're still in a tiny range.
It's funny how the worm turns, right? When all of a sudden U.S. is the leading exporter and producer, all of a sudden, maybe high oil prices, not quite the detriment some might have thought. But, Adam, since the last time you were on with us, also we've seen a lot of movement out there in the nat gas side of the fence. In fact, it's our top mover to the upside here this week, up nearly 7% this week. It seems like pick a week, it's up huge, it's down huge. It's certainly been very volatile of late. Catch our audience up. Are you guys trading a lot of nat gas out there of late? And if so, what's been lighting up your tape out there of late with all these crazy swings?
We don't do that. We don't do that much gas, but I would say that the milder weather in the US has caught a lot of people off guard. The mild winter so far here in Europe has just been crazy. It's just there's just been nothing. I actually think there's a massive capacity influx about to happen next year. I mean, I was we were talking to some of our customers that I think nat gas goes a whole heap lower, like 1.5. 1.7, because the amount of capacity that's coming online in 2020 right across the world. Plus, we might see some demand fall as the kind of global economy slows. I think when I see the super big ticket stuff going on that's taking guys weeks and weeks to get into it, the clever guys are buying some downside back into the kind of September, October, November next year, so the early winter season where they can get some bang for their buck.
So it's still pretty much all WTI all the time for you guys. And you mentioned a little bit of Brent earlier, too. You guys sling some Brent, too, or is it pretty much 90% WTI for you guys these days?
Yeah, Brent's busy. Gas. We don't really nat gas. We don't really get too involved in. If someone's got a lots to do, then we'll get involved. But kind of day to day kind of quoting into Globex, no. But if some of the OTC brokers that are clearing through the CME want to do something, I'm interested, because you get to see those guys can be more directionally intimidating, for want of a better term. So you want to be part of what they're doing and how they're thinking, and they've got much bigger research teams. So I want to see what they're doing. So I'm prepared to take the other side while I work out how to get out of it.
I like that, directionally intimidating. That's a good way to term a lot of the brokers and the big houses out there, particularly when they have some big flow coming your way. We don't get a chance to talk a lot of Brent on the show because WTI, at least from our perspective here on the U.S. platforms, does obviously a lot more for a variety of reasons. But I'm curious, are you seeing similar setups out there in Brentland as well? As the upside skew as weak out there as it is in WTI, or is it a little bit of a different beast?
No, it's prompt Brent is always a little bit more kind of a bit of a different beast. But one of the things that is there's more depth. So Brent trades heavy right out kind of to 2022, whereas you don't see so many requests for WTI out. You see a lot of Z20s, so that's the new play. It's the kind of 1 year out. Everyone's thinking in those kind of terms. You'll see Brent. I'm looking down the list here of today's kind of requests in Brent. They're all into 2021. There's a June 2021. There's a deck 2021. There's a 21-22. There's a lot more out in the curve. We always say the kind of folly and the fodder is in the front, and the informed money's in the back. And so Brent gets a lot further out. It's quite rare to see front stuff in the Brent, whereas you get a lot more WTI early action. That's what I would say is a different marker.
Like I said, we were in the middle of the listener questions. When you were able to tear yourself away from the screen a little bit. We had a question from Mill. I think he goes by Mallrats. Let's call him that. Mallrats. He wanted to know if we could discuss OPEC Watch on the show. We touched on it a little bit earlier on the show. Obviously, it's a tool out there analogous to what they're doing in FedWatch, but for these OPEC meetings. I'm curious, is this a tool you guys spend any time with over there, Adam? The OPEC Watch, you and your users over there on your platform?
I do. We do use it. It's not something. I mean, for me. It's taken a balance of skew, of term structure of the futures. So I think it's predictive of output changes, but it's kind of, what were we doing? Kind of, I checked it a few days coming into the OPEC meeting. It was 62%, 63%. That's now moved up to 75% of maintaining current output cuts, and further output cuts have kind of really increased a little bit, and everything's gone off the decreased output side, which is all fairly obvious. So it's accurate in a known environment. How predictive it is. I'd rather see a change in a 20 delta skew over a course of a couple of days to be more predictive of what the output is, because if you look at that bent way before we started to move this week.
Like I said, I was in the middle of answering this question earlier from Jackson Knight. He wanted to know why is it so hard to trade futures options with most major brokers in 2019. Seems like it's still 2009 for a lot of these firms who expect you to trade Apple and SPY. I'd be curious to get your thoughts on this as well, Adam, because you obviously have a large retail community over there using your platform on the macro hedged, different product, obviously from old school in the options world there, macro hedged. And interesting. So I'm curious your thoughts on, have you seen a lot of evolution? Because it seems like certain brokers have really done a good job of trying to facilitate futures and futures options trading. Others, it's not really a priority for them, and you could tell right away when you log in. Have you seen certain brokers trying to facilitate more of your clients and your users and bringing that paper flow on there? Or do you agree with this listener, Jackson Knight, that it's still like 2009 from a futures options functionality perspective?
So my problem is that there's so there's a couple of things. That there is really, really easy access. I think a lot of traders become complacent to the single platform they're on. That you need to, stock guys coming into futures usually come at it completely from the wrong platform, and they're the guys that just get stuffed for either the wrong fees or their prices don't hit the book. It's quite interesting, actually. I see some guys on some of the kind of more platforms that will put a pricing and the brokers resting the order on their side before it trades, all that kind of stuff. Whereas, if you want to trade futures and futures options on futures, it's very easy. you've got the right platform. And there's loads of FCMs out there. You can kind of research them and make sure you go on a futures only platform, I say futures only platform, a futures specialized platform. CTS, TT, any of those guys. You'll find, but yeah, I agree. I mean, we've got a number of customers that are actively trading. They're using things like TOS, Thinkorswim, and Interactive Brokers. They're doing pretty well. They've navigated their way around it. Tasty Trade's I'll be honest, complete nightmare because most of our customers can't do half the months we want to do because they're geared up for stocks, and we'll say we want to do an April against a March, and they can only do the March because they only lit the quarter months. My best advice, if you're going to take it seriously, get a platform that can facilitate you, because the edge is in all the nuances. And I don't believe it's quite 2009, but you just have to get some separation. The holy grail out there is this one platform we can all use that's got everything on it. It just doesn't happen. I've got a separate platform for foreign exchange. I've got a separate platform for OTC options. I've got a separate platform for on exchange. If ICE had their way, they have a separate platform for ICE. And everything, you just have to get used to it. It's just the world's changed, and there's multiple platforms.
Yeah, I'm not quite as dire as I used to be. I used to always joke that I'm not quite as bad as this listener. He says it's 10 years behind. I used to joke that, the futures-oriented brokers, when it came to them adding on options functionality, were roughly 5 years behind in terms of what they brought to the table. All the equity and index options brokers, they've been fighting tooth and nail for every scrap, every point of market share. So they had to spend a lot to have a robust platform. It wasn't necessarily the case on the futures side. They had different brokers that specialize in different products, different pockets of liquidity, and they had their business. It wasn't growing, but it wasn't really going away. They weren't really incentivized to spend a lot to provide a robust offering. But that is starting to change. Some of the platforms you mentioned are ones I mentioned as well that have done a decent job. Again, some of the M&A in the space maybe making some of that questionable. What's going to happen in the future of those platforms, I don't know. But some of those platforms are there, but you're right. There still is no. I wish I had that one I could recommend to everybody that can do all of the products you want to trade and do them all well. It isn't there yet. So keep looking, Jackson. You're better now in 2019 than you were certainly in 2009 and even a couple of years ago. I've had a lot of major brokers come to me and really express more interest, certainly because we do this show, and saying, hey, we play here now. We want to play in this space. This is an interesting space for us. So that's good to hear for this program and for this audience. That means more of these tools are coming, but you still got to, like you mentioned, you still have to do a little bit of your own due diligence to find the one that is not just good in futures options, but also in the product category that you want to trade. If they're great in, futures options on equities, that's really about it. And you want to trade ag, something else, not going to be the platform, unfortunately, for you. We got time for a couple more, then we got to wrap it up here. Let's go. Analysis One wants to know, why do you guys talk about SKU so much? I find it confusing. Well, that is not our intent. Our intent is to educate, not to confuse, to inform, maybe entertain a little bit too, but to let you know what's going on. And the SKU really is pretty much the de facto roadmap for what's happening in a particular product. It's all encapsulated, all the paper flow, all the customer intent, all that stuff is all encapsulated in the SKU. So it's kind of a one metric we can give you. And the change in that metric also very important. That's one metric we can really give you to kind of encapsulate in a nutshell what's going on out there in a particular product. So if you find it confusing, I know some people like the moving and the shifting and the sliding and all that kind of stuff is a little bit overwhelming. I get it. I've had people come on here who are pros in the space, and we start talking about those numbers, it completely fogs their mind up. So I get why you might be confused about that, and we'll try to maybe make that even more decipherable for you on future programs. But in general, I encourage you, if you're intimidated by SKU, that means probably something you might want to learn more about, because it's very important here for the space. We'll wrap it up here with this one from Elion. Elion wants to know, is any follow-up data on the CME metal SKU study? I find that one, everyone's confused this week. I find that one somewhat perplexing. Well, yeah, I mentioned our friend Eric Norgum, CME, was supposed to be on the show today, last minute change of plans. He had to scramble, as a lot of people do this time of year. A lot of things going on. He had some other things cooking. He also beams in from across the pond, so his schedule a little bit different. But we do have him on for next week. So Elion and everyone else who has questions about that SKU data he did, particularly in the metals, which was, I'm with you, a little counterintuitive. We'll have him on to talk about his findings and maybe his thoughts about it. Maybe he found it counterintuitive as well. All right, unfortunately, that music means we've come to the end of an epic journey through the world of all things energy and everything else. Adam, I'm glad we can get you on. Better late than never. And if folks are intrigued, maybe they want to reach out to you, see what you guys are doing over there in Macro Hedged, or maybe you have some interesting stuff up your sleeve. You want to leave them with a little bit of a tease, sir. Now is the time. The floor is yours.
Okay, thanks, guys. Yeah, we've really good thing for everyone to get involved in. We've spent a lot of time pouring the last 25 years of our institutional trading career and market making career into our course, which we're now selling out at a huge discount of 67%. It's well worth getting. It's 40 hours, 80 videos, and hopefully 99% of the questions that you've been asking today, everyone, you'll get answered in that course. So snap it up.
So it's pretty much one course that covers, I'm looking at it right now, 40 hours and 80 videos. So you pretty much have the one course. It's like the mega course.
Yeah, and this is everything me and you have known for all of our lives. This is just piled into a course, step by step. My objective when I wrote the course was I've got a pile of books, thousands of pages, which we've all read. Everyone's read all the well-known ones, and no one's ever going to read them because some of them are now defunct, but you have to know them to be able to have a beer in a bar and be able to have a conversation about them. And B, that they're not relevant. And what I've done is taken all the good bits, all the new bits, and made it relevant so people can actually make some money when they're trading.
Saying I can put away my Natenberg here on my shelf. It's no longer the Bible. Is that what you're telling me here?
Yeah, that's the thing. Is you go for a beer and you kind of 4 beers in and everyone starts kind of we know it's the Bible, but there's a lot of things he said there that are now no longer. There's no longer $2 wide arbitrages in options. When he wrote it, that they existed, and so that we've just tried to kind of take all the great stuff he's done and kind of get it a bit Globex, a bit 21st century.
There you go. Check it out for yourselves, listeners. It's Macro Hedged, MACRO Hedged.com. I like it. No strings attached, no contracts. Kick the tires and light the fires. See if you like you said, there's a sale going on now, so check it out there for yourself. And also our friends over there in FTSE Russell land. Sean's over there in Singapore, so no delicious burgers for us here on the show this week. Check them out. FTSE Russell, FTSE Russell.com is the place you want to go for all that data you're always asking us about for buy rights and vol harvesting. You guys seem to like your premium harvesting in the small cap, so that's where you want to go, FTSERussell.com. Give them a follow on the old Twitter as well, at FTSE Russell, for all that data that comes out in between shows. We're not recording episodes here. Stuff happens outside of Thursday, believe it or not. So keep up with them. And, of course, our friends over there in the land of CME, CMEgroup.com/Twifo is the place to go, of course, for this show and all the data there. And then, of course, while you're at it, check out all the stuff. Eric's coming on next week, so you check out all their research over there. It's all on the homepage. It's easy to find. They don't bury it from Eric and Blue. And it's interesting stuff. Check out that paper we talked about before, because we'll be getting into it in depth on the program next week. And on behalf of Adam and indeed myself and our friends at FTSE Russell and our friends over there at CME, I want to thank all of you out there for downloading, streaming, subscribing, for sending in such great questions. Maybe we will do another all-listener palooza to wrap up the year here soon. So keep those questions coming. We love to hear from you. And we'll see you back here tomorrow, 1 o'clock Central, for Volatility Views. And we kick it all off again on Monday with Option Block and Crypto. And we get right back here to Thursday for more of This Week in Futures Options.
This Week in Futures Options is brought to you by QuickStrike, options pricing and analysis software. QuickStrike offers powerful and flexible options analysis and pricing tools via an easy-to-use web-based interface. View prices on outright options or spreads with comprehensive page-level analysis controls. Build trades, manage risk, or explore historical volatility. QuickStrike has you covered, with market data reports ranging from open interest to the term structure of volatility. QuickStrike is the perfect addition to your trading toolkit. Learn more about QuickStrike at Bantix.com. That's BANTIX.com. And don't forget to follow us on Twitter at QuickStrike1. That's QuickStrike1. This Week in Futures Options is also brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. Investors in the U.S. and around the world are using FTSE Russell indexes to benchmark their investment performance and create investment funds, ETFs, structured products, and index-based derivatives. Many Options Insider Radio Network listeners will be familiar with the Russell 2000 Index. Russell 2000 futures and options are currently trading on the Chicago Board Options Exchange and CME Group. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.